Hey guys, it's Andrew here. I thought I would put together a short video today on some of my experiences over the course of the last 20 years and some of the industries, some of the mistakes that I've seen that often catch investors, and really the three things that I would avoid big time if I was a new investor starting out in financial markets. If I had my time again, over the course of the last 20 years, I've traded stocks, I've traded futures, I've traded FX, I've run an FX trading desk for a number of years, I've been a director of a broking business for a short period. I've had a front row seat in financial markets that the average mum and dad retail investor will not have had that experience. I've worked with investment bank and hedge fund traders. I've had the experience of going to the pits in Chicago in 2008 and experienced pit trading as well as retail trading, electronic trading. So I've seen a lot, and I've also worked with thousands of retail traders, and as I said a moment ago, worked inside a broker as well. So today I thought I'd share with you my top three things to avoid, and then also give you some tips on some things to make sure that you focus on as a retail investor. The first thing that I would make sure that you avoid at all costs is getting involved in any derivative markets. When I talk about derivatives, I'm talking about markets that are what's called over-the-counter markets. So they're not exchange traded. They don't have an official exchange. So the currency market does not have an official exchange. The crypto market does not have an official exchange. And when you're talking about things like options, you're talking about trading commodities, gold, oil, these sorts of things. These are derivative markets where really what you're using is leverage and investing in those markets. My experience over the course of the last 20 years, if you're going to try your hand at those markets, you've got to be, number one, either working inside an investment bank or a hedge fund. You've got to be trained by investment bank and hedge fund traders, and you've got to have some knowledge that is going to give you an edge by working inside those institutions. If you're a retail trader trying to trade FX markets, crypto markets, etc., then statistically, there's a very, very high probability you're going to fail and lose all of your money. I mean, these websites of brokers don't have on the homepage, if you look closely, over 70% of our clients lose money trading CFDs because they've got a lot of clients making money. I've been a director of a broking business. I can tell you that figure is closer to 98 to 99% of people that invest in derivative markets lose all of their money. So stay away from them. They are essentially speculation only. There's no investing involved. It's all speculation, and the probability is you're going to lose your money. The other market that I would stay away from that people often get enticed into is day trading. Oh, well, I can invest my money in a short window of time in a market and quickly make some profit and replace my income from my job. It's a nonsense. It doesn't happen. Nobody is a successful day trader out there in retail land. There are day traders inside investment banks and hedge funds. They have Bloomberg terminals. They trade economic data. They have significant advantage to retail traders. Anyone is trying to tell you that you can day trade and make a meaningful return on investment. It's just nonsense. It doesn't happen. I've seen it, guys. There are no day traders out there in retail land that make money. They might tell you that they make money for a short period of time, but I can tell you over the course of time, they will dust their money. The third one is using leverage. Whether that's in the share market, whether that's in any other market, leverage is dynamite that most retail traders do not actually know how to use properly, and they blow up. So if you think to yourself, well, the broker's going to give me some leverage, I can put 10 grand in and I can buy up to $50,000 worth of shares, just don't touch it. You don't need it. Leverage is something that desperation leads people into using because they think they can compound their money quicker or they can make a high return on investment. Just don't get any leverage. You don't need leverage. If you're buying good quality businesses at the right time, particularly in the share market, you don't need leverage at all. People that use leverage just simply don't know what they're doing, and most of them blow up. The things you need to focus on is you need to focus on the simple things. You don't need to know everything. You need to know what matters. And what matters, if you're genuine about building high returns on investment, then you've got to give yourself a little bit of time. You got to give yourself an opportunity to learn how to buy global growth businesses. There's only one reason why share prices go up. There's only one reason why many of the big names you've heard about, Buffett and Templeton and Munger and Greenblatt, is because they own global growth companies and they bought them when their share prices were discounted, and they own them for lengthy periods of time. There is no shortcuts. If you want to try and speed up the process, the faster you want it, the riskier it becomes, and the harder it is to get. To make great returns on investment, just simply focus on the simple things. If we can help you here at Trading Mastery, jump across to our website, tradingmastery.com, and we're more than happy to do that. But the three things I urge you to stay away from is derivatives, thinking that you might be able to day trade, or thinking you might be able to use some leverage. Just don't go there, guys. You don't need it. Thanks for watching. I'll see you next time.